And now, without any further delay, let's begin today's event, sponsored by IBM and hosted by American Banker. I'd like to introduce your moderator for today, and that is Michael Sisk. With that, Mike, you have the floor.
Thanks very much, Tanya, and I would like to welcome the audience once again. We are grateful that you've chosen to share some of your day with us. We know your time is valuable, and we'll honor that today with what I'm confident is going to be an enlightening 60 minutes or so of discussion. Once again, our topic today is Breakthrough Banking, the Cognitive Bank, and IBM Watson. And my name is Michael Sisk. I'll be your moderator today. I've been a New York-based journalist for about 20 years, and I've had stints as editor-at-large at American Banker. My articles have also appeared in Barron's, Crane's New York Business, Inc., Institutional Investor, Strategy in Business, and Worth. And I've co-written and edited a couple of books. The most recent was Merge Ahead, Mastering the 5 Enduring Trends of Artful M&A. However, more important is our excellent speaker today, Shankar Ramamurthy. He is the Global Managing Partner for Business Analytics and Strategy in IBM's Global Business Services business. In his more than 25 years as a consultant and business executive in more than 30 countries across 6 continents, he has worked on the intersection of strategy, information, technology, big data, and analytics. And we are very, very pleased to have Shankar with us today. And just before we jump into his presentation, I wanted to reiterate one thing that Tanya said at the top of the hour. We do have time at the end, usually about 10 or 15 minutes for questions. Please, as the spirit moves you, ask your question. You do not have to wait until the end. So plug away whenever it occurs to you. If for some reason we run out of time, we don't get your question, which sometimes happens when we've got such great content and a full hour, we will follow up. So your voice will be heard. Please ask anything you'd like, and we'll be sure to get back to you on that. And with that, I think I'll be back a little bit later to run the Q&A, but in the meantime, I'm going to turn things over to Shankar. Shankar, you have the floor.
Hey, Mike, thank you very much, and thanks everyone for joining. Really appreciate it. So over the next 45 minutes, I will step through some content which will give us all a sense for how cognitive computing is changing every industry, including banking, and there's much for us to be aware of and plan for in the start of what we call the cognitive era, what IBM calls the cognitive era. So in the agenda today, I'll go through 3 main topics. I'll frame what digital reinvention is about in this new cognitive era that we are entering. Then we'll talk about the imperative for becoming a cognitive bank, and I'll explain what cognitive is and what it means for banking. And then we'll spend a few minutes on the way forward. Then we'll open it up for Q&A. I want to start by first spending a few minutes talking about a landmark study we've just wrapped up. Every couple of years, we do a major study called the CXO study, where we go and interview thousands of executives around the world. And this year, in the last 10 days, we launched the CXO study for 2015, the largest study of its kind, in which we interviewed over 5,200 executives in over 70 countries. And I'll share some of the findings with you. While it's a cross-industry study, a lot of the findings are very relevant for banks and bankers. The title of the study is called Redefining Boundaries, and fundamentally, almost to a person, the executives we interviewed were worried about the fact that every industry, the edge of every industry is morphing. Industry value chains are getting reconfigured. Fundamentally, new ecosystems are being created. And as a result, they're not just competing with traditional competitors, but they're also competing with digital disruptors, digital invaders. So every enterprise, regardless of where they are in the world, needs to be conscious of and plan for digital disruptors. Now, in banking, of course, we see a lot of that with what people call fintechs, competitors coming after some of the most profitable aspects of the banking value chain. Banking does have an advantage that some other industries do not have, in that there are meaningfully large regulatory barriers. Regardless, financial institutions have to be aware of and plan for these digital invaders and digital disruptors as well, particularly ones powered by analytics and cognitive technology and cognitive capability. the study also showed that every executive and every enterprise needs to have a panoramic perspective. In that, they need to step back and look at the landscape and keep a watchful eye on not just the traditional competitors, but the emergent non-traditional competitors as well. In fact, some of the most ferocious challenge to an existing franchise is likely to come from these digital invaders and non-traditional competitors. And regardless of industry and geography, what the C-Suite study highlighted is that every enterprise has to be fast and nimble. So you've got to be among the first to take advantage of what digitization offers, and you've got to be consistently among the best in terms of how you deploy it. Or chances are your profit pools are likely to be constrained, in some instances totally shredded. And we've seen industry after industry suffer by the impact that non-traditional players are having. And in fact, one of the interviewees talked about how their industry is being Uberized, which is now becoming a word that's commonly used in the executive vernacular. I'll talk about a couple of things that jumped out of the study for us, which will be interesting for this audience. This point about industry convergence is, as you see, is a theme that's right on the top of every CXO's mind. So CEOs, CFOs, Chief Human Resource Officers, Chief Technology Officers, Marketing Officers, overall COOs of enterprises. And the one that was a bit of a surprise for me as we looked at the data is the sharing economy, how most executives do not at this point see the sharing economy as something that's going to materially impact business in the next 3 to 5 years. We do these studies on a constant basis, and it'll be interesting to see over the coming years how the sharing economy plays out. We are, of course, starting to see the impact of the sharing economy in banking, in the way marketplaces coming together between buyers and sellers of money, bypassing the traditional financial institution. We're seeing lots of interesting models emerge in the sharing economy, but across the board, the C-suite participants did not yet see that as a major trend, while everyone is talking about industry convergence. Now, for the first time, and we've been doing this C-suite study for over a decade, 12 years, technology came out as the number one game changer, which is fascinating in that it's not just the CIO or the CTO that's focused on technology, the impact of technology. It is something that every executive is focused on, and every executive is deliberately looking at how they can use technology in order to change the way they conduct their business, both in an offensive fashion in terms of market-facing capability and in terms of defensive and operational dimension as well. It's quite interesting to see how that's played out as a really dominant force. And from an IBM standpoint, we do believe that analytics and cognitive, which are part of the technology factors, are indeed game changers and will enable bankers and banking institutions to actually use this technology for market-facing and for operational needs as well. Now, in the study, we actually looked at what we call the torchbearers. These are the leading innovators among the companies that we interviewed. So we took the innovators and then we looked at which of these innovators have had superior performance over the last 5 years, and superior performance defined by both revenue growth and profitable growth. So both top line and profitability. And about 5% of the participants in the study were both innovators and were financially outperforming the competition. So we spent time looking at what these torchbearers were doing to separate themselves from the pack. And there's a couple of data points that I'd like to share with you. The first point worth noting is that the torchbearers are actually better placed to take advantage of disruptors. And in financial services and in banking, the disruptors are the fintech enterprises. And these torchbearers are much more aggressively using cognitive computing. So about half, 47% of the leaders are using cognitive computing already compared with the rest of the pack. And in other industries, they're using technologies like advanced manufacturing, read things like 3D printing, read things like leveraging the Internet of Things. That's being used much more aggressively by the torchbearers, and they're also empowering their employees by decentralizing decision making much more aggressively than the rest of the pack. Now, when I look at financial services and I look at banking, disruptors that we've talked about are really unbundling banking services. This is you've all seen this. We've all seen this. All you need to do is take the website of any typical bank, and this is the website of a bank, and we've just masked the name of a bank, the bank on this page here. But if you actually look at their homepage and you look at all the various capabilities that they offer, you notice focused, specialized fintech competitors going after virtually every aspect of their franchise. And this is playing out particularly ferociously in the metro markets in North America and in Europe, but it's a trend that's playing out worldwide. So the non-traditional competitors, the disruptors, are going after some of the most profitable aspects of the banking franchise, and they're really systematically deconstructing and unbundling the banking ecosystem. And over time, they are materially compressing the profit pools for traditional banks right at the time when fundamentally powerful forces are reshaping the banking industry. Not only is there a pressure to perform coming out of the financial crisis, not only is there increased regulation, we're also seeing an extraordinarily heightened security posture that financial institutions need to take, while at the same time we've got emboldened customers asking for more and more, and competition, fundamentally disruptive competition coming at banks, which is of course diminishing returns, and in an era where interest rates are pretty low, declining operating margins, and an extraordinary rise in regulatory complexity, leading to incredibly high compliance costs. In our estimate, banks around the world are spending over $200 billion in regulatory compliance. And by the way, that's one area among many where cognitive computing is actually able to be of help. Clearly, investments in cybersecurity is the order of the day, and emboldened customers are forcing financial institutions to be even more ubiquitous than ever before. Anytime, anywhere, consumer culture is the order of the day. Increasingly, as customers, we expect banking to be available on every device, every mobile device, including things like the Apple Watch. And this growing competition from non-traditional entrants is very much the order of the day. And as we talk to banking CEOs, it's very clear they're asking three fundamental and critical questions. Number one, is my strategy ambitious enough, given all the issues I'm dealing with? Is my execution fast enough? And how do I transform my people and the capabilities of the enterprise. These are burning issues that banking CEOs are dealing with, which takes us to the imperative for the cognitive bank. Let me first start by talking about what cognitive computing is and what Watson's able to do in that context. For the first time, we've entered an era where computers are able to mimic human thinking. And specifically what that means is we are able to now not just program computers the traditional way, but we are able to have computers that understand, reasons, and learns by itself. I'll tell you what that means. For the longest time, computers have only dealt with structured data, and as we know, in excess of 80% of the data out there is not structured. So we got text, written text, we got voice, we got video, we got image, and for the first time, we are able to mine all that with computers being able to understand textual data, voice, video, images, and then understand the context and make that context computable. Not only that, computers are now able to generate and evaluate hypotheses, weigh the options and the evidence, and come up with probabilistic conclusions in the same way human beings do. And it's able to learn. It adapts and learns and improves. And in fact, it's a function of the amount of data that's available to it. The more data that is available to a cognitive computing platform, the crisper and sharper its outputs and its recommendations become, because we are able to provide it with a continuous feedback loop. So in banking, when I started consulting in banking 25 years ago, we used to write a lot of business rules to create a small amount of data, and the data tended to be the source of truth for the enterprise from a regulatory standpoint, from a customer standpoint, and so on. Now we live in a big data era where that paradigm is being flipped on its head, in that given a large enough amount of data, we're able to discern fundamentally new business rules and fundamentally new insights from the data. And the cognitive computers like Watson, capabilities like Watson, are able to learn in that we don't necessarily need to program the computer, but we can teach it by letting it know whether the outcome it's come up with is right or wrong. And over time, it's able to learn based on the richness of the data that's available to it. So we are taking this and applying it in a business context enables us to actually apply cognitive computing in a way that dramatically enhances human skills and takes an average professional and radically improves the level of their expertise and productivity. So if today we are really at the threshold, for most enterprises, we are in the digital era, and digital computing enables people to multitask efficiently and connect globally. Some of the leading enterprises and many banks are now entering the cognitive era, and we're doing a lot of work with several financial institutions around the world, where cognitive computing enables the computer to dramatically augment and expand human capability and skills in a pretty broad range of capabilities. Let me talk about the kind of capabilities that are able to be bridged by cognitive technologies like Watson. So as we all know, the human brain is extraordinarily powerful, but it can only at any point in time consume and process limited amounts of information. That's the limitation of the human brain. By contrast, machines' computing capability traditionally have not been able to handle ambiguity. It can process a lot of data, but it's not well tuned to handling probabilistic and ambiguous situations. Human beings are subject to, of course, the natural physical and mental limitations of fatigue and are inherently not scalable. On the other hand, compute capacity is extraordinarily scalable, but historically they've been pre-programmed and rigid in that they haven't been able to learn, reason, relate, and understand context. And of course, the human brain is fallible, while a programmed computer is not. But on the other hand, it has historically not able to interact in a natural language construct, or indeed handle voice, video, images, and so on. When we meld these two capabilities together, we have something extraordinarily powerful. And there's been books written about this as well. There's a recent book called Race Against the Machine. What we think about in IBM is think about it as race with the machine. If we're able to meld the capabilities of cognitive computing and humans together, then in a financial institution context, we have these man-machine, race with the machine style notions, the capabilities that we build that enables the enterprise to learn, reason, and resolve and interact in the intersection of human beings and compute capacity, but way, way better than would have been able to be done in the past. And that then enables us to create a fundamentally new type of financial institution. And we're starting to see the emergence of what we call the cognitive bank. And the cognitive bank integrates cognitive computing capability, of course, in a secure and scalable infrastructure that derives value from the exchange of digital data across their entire ecosystem. We've done studies for financial institutions where we've been, by applying cognitive computing techniques on top of traditional reengineering and optimization techniques and analytics capabilities, that have been able to add up to 4% return on equity to the enterprise over a program, over a transformation program that would be a 3 to 5 year journey. At the heart of the cognitive bank are very simply 4 building blocks of capability. The piece that I've been talking about around cognitive computing, which has got machine learning algorithms. And when you think about machine learning algorithms, or what people call deep learning, think techniques like neural networking, genetic algorithms, Bayesian mathematics, and so on, statistical techniques that enable the development of algorithms that enables computers to learn. Natural language processing, and of course natural language processing we are all increasingly being exposed to natural language processing in a number of situations, not just in a cognitive context. And of course cognitive analytics, which is the bringing together of traditional analytical techniques with the probabilistic techniques that are being used in the cognitive computing world. Now, when you couple that with enabling infrastructure that brings together not just IT infrastructure, typically leveraging the cloud in a private or public context, but also big data. And big data, increasingly we're seeing financial institutions leverage data from outside the enterprise boundaries. We're seeing social media data, third-party data being brought together and curated with internal data. When you integrate it all together and you have a secure and resilient technology infrastructure, couple that with a digital network which is multi-channel, leverages analytics, digitizes operations, is available in a multi-channel, increasingly mobile and social context, and then you wrap the whole business ecosystem around it. This notion that a bank need not do everything that it needs to get done within the enterprise boundaries, because customers have logical economic choices, and equally financial institutions have the whole ecosystem of services and third-party partners that they can leverage, figuring out once they figure out what is core and what's context, figuring out what parts of the ecosystem they want to leverage, and bringing all that together in a systematic program is the journey, is the path that gets us to cognitive banking. I'll talk about a few simple case studies of how we are actually using Watson to power this cognitive era of business. There's several examples I can talk about, but I'll just talk about three examples, and then I'll kind of give you a framework in which to think about this. We've been working with a top Asian bank based in Singapore that uses Watson to make their wealth advisors much more productive. So this particular financial institution had the challenge of having to power its wealth advisors, so that rather than dealing with only high net worth individuals, they wanted to have those wealth advisors support a broader range of customers. And Watson has made their advisors over 25% more productive. We have another client in Europe where Watson is making the human agent in the branches and call centers much more productive. 20% improvement in call center productivity, because Watson is able to handle the interaction with their customers without the human agent having to intervene. And it's also able to help highlight situations where there are much more effective cross-sell opportunities and much more powerful dialogue that enables the human agent to drive more revenue, 20% cost reduction, while at the same time 8% increase in revenue. And I talked earlier on about regulatory compliance. We're working with a top-tier bank in the U.S. Where Watson is being used to help with regulatory compliance. In that, Watson is learning the hundreds of regulations that apply to this financial institution, and is able to look at, as an example, a Dodd-Frank bill, which has over 2,000 pages of text in it, to pull out the specific parts of that legislation that applies to this financial institution. And you couple that with the hundreds of regulations that typically a large financial institution needs to deal with across its full range of products and services and jurisdictions, you get a sense for the power of cognitive computing and what a technology like Watson's able to do. There's lots of other case studies that we have in North America and around the world where cognitive capability leveraging Watson is being used to increase the effectiveness of customer self-service, to do better risk management, to help with better underwriting. Think about the range of unstructured documents that's got to be processed in mortgage or other underwriting situation. Technology like Watson's able to make that much more productive. Regulatory surveillance, looking at patterns of traders and front and middle office professionals to actually proactively manage the surveillance aspects of regulatory compliance to prevent inappropriate transactions from happening before they happen is another example where Watson's being used. Now, we recognize, and our clients recognize, that moving to cognitive is a journey, and for a typical financial institution, the journey starts with some simple proven use cases, and there are about 100 use cases in banking today, based on the work we've been doing around the world, that our clients can use to jumpstart the journey, all the way through to some really ambitious things that some financial institutions want to do. And the trick with all this is to think about it as a journey in which we start with simple proven use cases that unlock economic value in 90-day cycles, so that you use the value unlocked to invest in the more comprehensive use cases, recognizing that the cognitive bank journey is a multi-year journey. Increasingly, what we are doing, what IBM is doing, and what we are doing with our clients is unbundling Watson capability and making it available as part of APIs, application programming interfaces. And today, Watson provides close to 30 APIs that enables our clients to take specific cognitive capabilities as single APIs and embed them into the processes very simply and elegantly into the processes that a typical bank is performing. I'll give you one example of many. One of the capabilities that Watson has is the ability to actually come up with a psychodemographic profile of an individual based on 10,000 words of text someone may have written or spoken. So that particular API enables an enterprise to look at text written by any human being and then convert that into a psychodemographic profile that is able to be used by that financial institution to figure out how to interact with that particular customer or prospect or client. So that is an API as an example that can just be plugged into traditional processes that just makes the process much more powerful. There are other APIs that convert speech to text and text to speech. There are APIs that recognize images, and there are more and more of these APIs being opened up. So at one level, start of a cognitive journey could be nothing more than just taking some of these APIs and plugging them into business processes in a bank. At the next level, it could be some of the use cases that I talked about, which unlocks economic value in relatively quick order. And in the most ambitious of financial institutions, it could be going down a much more comprehensive transformation in becoming completely cognitive bank. And there are a few large enterprises that are actually doing major transformation programs, leveraging the combined power of analytics and cognitive. So this is the journey that many of our clients are on. And this is the journey that we believe every financial institution will go down over the coming months and years as digitization and cognitive computing becomes the order of the day, and it becomes effectively foundation stakes that every enterprise will have to make part of their DNA. So as we think about the way forward for financial institutions, and this is something that came out of the CXO study as well. We believe that given all the disruption that's happening in the economy and in the banking ecosystem with traditional or non-traditional competitors going after very, very profitable parts of the banking value chain, with the industry convergence that's happening, and the need to respond to these market opportunities and threats. Every bank has to focus on the three key items of scope, scale, and speed. What do I mean by that? Let me talk to scope first. The traditional financial institution of a few years ago, particularly a large financial institution, tried to be everything to everybody everywhere, in that the breadth of offerings they tried to provide their customers covered the full waterfront, and the depth of activities that they did within the enterprise boundaries covered everything from customer facing activities all the way through to fulfillment and back office activities, including everything from payroll to the rest of the capabilities that a typical enterprise might need. It is very clear in the digital and cognitive era of today and tomorrow that the scope of what any single enterprise is able to do is narrowing. And every enterprise, every bank has to very consciously think through the areas of focus for it and the scope of what it's going to do, and figure out where it's going to use third-party capabilities. At the same time, the scale at which something can be done is becoming truly large and truly global. and particularly because technology is now able to augment human intelligence. Um, Cognitive and analytical capabilities can take a relatively small disruptor and provide them with the scale that enables them to compete with the biggest enterprises of today. And we've seen this disruption happen in industry after industry, the way in which Airbnb changed the landscape in the hospitality industry, the way in which Uber's changed the taxi industry worldwide, are just early examples of how industry ecosystems are being impacted by disruptive innovators that are able to achieve extraordinary scale on the back of digitization and cognitive capability. And in banking, in aspects of the value chain, like payments, are potentially ripe for disruption, as is some of the most basic aspects of bringing buyers and sellers of money together. So scale for every enterprise, every financial institution is about understanding the scope of what they want to do and recognizing that they're going to face scale competitors that might potentially have economics that are quite different from their traditional competitors. And last but not least is speed. This notion of learning fast, becoming agile, having minimal viable product, putting it out there in the market, taking on board customers' feedback, and actually innovating very, very rapidly. What we are finding in the digital and cognitive era of today is not just that the speed in which the industry is moving is accelerating, the acceleration of the acceleration is accelerating as well. So scope, scale, and speed are three imperatives for every enterprise to be aware of, and particularly financial institutions as they go forward. There's a lot more detail that we can step through in terms of the actual C-suite study, and in fact, I would encourage all the listeners on this webinar to review our C-suite study. Lots of interesting insights there, and you're able to benchmark your transformation and where you are as an enterprise against your peers by actually taking that simple instrument that will plot where your function is, regardless of whether you're a CFO or a CEO or a CIO or a chief marketing officer in a banking context, and compare yourself against the industry. We've got enough participants from the banking ecosystem in the study that the outputs are going to be statistically sound outputs. So I would highly encourage participants to go and have in this webinar to go and have a look at the IBM.biz C-suite study benchmark tool and benchmark yourself. We've also done a recent paper on banking and cognitive computing. We talked to hundreds of bankers in coming up with that study, and there's a lot more detail than what I've covered in the study. If you go to IBM.biz, Breakthrough Banking, white paper, WP, there's lots of interesting insights, and that's able to be downloaded from our website as well. All I've been able to do today is scratch the surface of banking in the cognitive era. We're going to do a follow-up call on 9th of December at 2 p.m., where we will dive a lot more into the specifics of Watson and cognitive computing. We'll do a deep dive into how Watson's being used in a wealth management context, for example. We are also going to do a simple demo that gives you a sense for live as to how cognitive computing can work. So I'd encourage those of you who are able to make it to actually join us on the 9th of December at 2 p.m. as well. So let me just close by making the comment that I started this webinar by stating, which is for every bank and every banker on the call, we've got to be among the first in the industry to take advantage of what the cognitive and digital era has for us. We've got to continuously be among the best. And if you're not able to be among the first and among the best, chances are our traditional profit pools are going to get competed away. And in our study, we just call it be first, be best, or be nowhere, which might be a bit of an exaggeration. But the whole notion here is that none of us are able to continue to protect our profit pools without constantly innovating, which is all about being first, and continuously meeting customer expectations, which is all about being among the best. Those are becoming foundation attributes in the banking ecosystem, and frankly, they are becoming foundation attributes for every enterprise, regardless of which industry they're operating in this cognitive era that we've just embarked on. Let me just pause there and hand the floor back to Mike so that we can get into the Q&A part of the discussion now.
Great. Thank you so much, Shankar. Really just fascinating material and great call to action follow-up here. Let me give you just a moment to get a sip of water. It's always tough when it's just one person carrying the whole load on this, so thank you so much. And I do see some great questions coming in, so thank you to the audience for contributing some questions, and if you've got anything on your mind, please, now's the time. So first question is, can you talk about the payback period or the cost of utilizing this technology?
Great question, Mike. So the payback period is a function of how ambitious the plan is. What we tend to say to our clients is, let's do what we call a business value assessment, wherein we come and spend some time thinking through, when we think about cognitive banking, thinking through the parts of the bank where you want to apply cognitive capability. Let's understand what the business value is that we can unlock, and let's take the journey and break it up into bite-sized pieces so that we can lay out a cognitive banking journey where economic value gets unlocked in 90-day increments. And for a typical bank, there will be some things that they can do immediately. There will be some transformational projects that could take some time to implement. And what we do is we put it all into a roadmap such that we've got some longer-term projects being done at the same time with projects that have a very short term time to implement and time to money, so that the overall journey tends to be self-funding. At the most simple end, it could be implementing some APIs. At the most complex end, it could be an entire enterprise transformation. And the trick is to put that into a logical journey that unlocks economic value incrementally over time.
Wonderful, thank you. All right, next question. Can we teach Watson to read a loan document, defined terms, assist in the onboarding process?
Absolutely, and that's the beauty of Watson and cognitive computing. What we need, the way you teach Watson, what we call the actual term we use is called a corpus, and a corpus is a body of knowledge that Watson gains in a particular domain. So every industry and every part of the industry has its own set of terms and vocabulary and industry vernacular that Watson's got to learn and recognize what is important, and the more it is taught, the more it can go through a document and understand and improve its understanding of the document. And absolutely, Watson can be taught to learn loan and loan terms. It's being used in multiple industries to learn lots of different things. Some of the ones that people have seen in the popular press. Watson's learning oncology. It's being taught by the best doctors in places like MD Anderson and Memorial Sloan Kettering to learn to read journals and understand oncology and figure out how to come up with the right protocols for oncology. It's being used in claims processing and insurance. It's being used in underwriting and insurance. It's being used in wealth management. It's being used in technical support in multiple industries, and of course, it can be used to address loan terms as well.
Excellent, thank you. All right, here another question for you, Shankar. Does this kind of technology require a capital investment, or can you pay as you go?
It's a function of how ambitious the program is. At the most simple end, to leverage Watson APIs, or in fact to use a product that we call Watson Analytics. Watson Analytics is a freemium product. In fact, you can just go to our website and can download the Watson Analytics product, for it to kind of use and learn from like 100 megabyte of data, things like spreadsheets. That's available as a free product, along with some standard cookbook of use cases that we have seen people use, so that not only can you download the tool free, you can also use it on a small amount of data, and it comes with some pre-generated capability use cases that we have typically seen. We can go from there to professionals moving from freemium to a premium product, all the way to Watson, using Watson APIs, where there's some systems integration work involved in leveraging the Watson APIs, but you don't pay for Watson per se until the APIs are used to actually drive business value. And each API, like I mentioned, the psychodemographic profile, a client pays for the number of times that particular API is being used in a production context, not just for taking the API and integrating it into what they're doing, all the way through to very specific, complex transformation programs where IBM and the consulting part of IBM work with the client to agree business outcomes, and IBM actually, GBS, put some skin in the game to achieve business outcomes. So you see the full spectrum all the way from free to freemium to API, where you pay by the drink, all the way through the transformation, as the full breadth of options available to clients.
Wonderful, thank you. Thank you for that. And next question here. Would you happen to have any studies on compliance or AML with respect to cognitive technology or Watson?
We are doing a project. We're doing a couple of projects right now around compliance in North America. These are projects that are in flight and under NDA. In one of the earlier slides, I talked about how we are using Watson for regulatory compliance, and in the instances in which we are using it right now, we're looking at 30% plus estimated improvement in productivity. And the more of these projects we do, the more productive Watson becomes. So indeed, it is being used right now in regulatory and AML style situations, but we do not yet have hundreds of those use cases. We will have that in time. We are in the early stages of that journey.
Good. Thank you. All right. Next question is, all right, let's go with this one. Did you examine be first versus be a fast follower? Typically, the latter is a good strategy. Excellent
comment. Which is why I said, the kind of the short form of what, to kind of crisp it up, we said be first, be best or be nowhere. In reality, the way to read that is be among the first and be among the best. And it is true that the empirical data shows you need not be the first, but you got to be among the first, which is this fast follower notion. But being a fast follower in itself is not enough unless you're among the leading pack on a sustained basis. It used to be in the old days that you could come up with a business model and be among the first and be a fast follower, and then you could rest on your laurels. The reality today is not only do you need to be among the first, fast follower or be first, but you got to continuously invest, continuously innovate, be among the best on an ongoing basis, and that requires agile techniques, that requires minimal viable product, that requires continuous learning and continuous investment, continuous tweaking, and that's the journey we're all on.
Excellent, thank you. And I just want to thank everyone in the audience. These are some great questions that are coming in, so I appreciate everyone's involvement, engagement with this great topic. Next question is, can Watson help us in market segmentation and strategize the opportunities for your financial products penetration?
So market segmentation is an interesting question. Traditionally, market segmentation has been able to be done using structured analytics, traditional advanced analytical techniques. And those techniques still apply in the cognitive era. Where technologies like Watson come into its own is when you're able to overlay traditional structured insights with unstructured information. Information, as an example, coming out of social media, information coming from tweets, and other comments on the web. When you put those together, you can get even much finer segmentation, and then depending on how fine-grained you want to get, and depending on whether you're dealing with retail customers or corporates, some of the personality profile, psychodemographic profile APIs are able to be used to get really precise by looking through the voice calls, the letters, the text people may have written. They come up with very precise segments, all the way down to a segment of one, in terms of how you provide services, how you do cross-sell, upsell, and how you manage the overall customer relationship. But there is always a value trade-off between the amount of investment that might be required and the economic value unlocked, and that's the kind of analysis that we do when we do a business value assessment to help think through how to actually go down, in this instance, a cognitive segmentation model.
Excellent, thank you. All right. Next, we're getting close to the top of the hour here, but we have time for another question, so let me toss this one out to you. This sounds like a long-term project. What is the logical first step?
So this is indeed a long-term project, so we recognize in IBM that this is a multi-year journey, which is why we call this the start of the cognitive era, and so it's a multi-year journey for not just the banking ecosystem, but the other industries as well, in which we are kind of first going to put in place the foundational capabilities of digital reinvention, and then put the cognitive capabilities on top of the digital foundation. Because it's a multi-year journey, the trick is to unlock economic value in logical and incremental chunks, so that the journey pays for itself. And when we do these transformation and business value assessments, we work with the clients to map their journey out, to balance investment with economic return, because time to money is an issue that every client is worried about. And given the extraordinary challenges that financial institutions have in a economy where interest rates are likely to remain low for some time to come, where there is margin pressure in every part of the business, where the regulatory burden is only increasing. Thinking through that journey in a very practical way to unlock economic value in short bursts is the trick to accelerate down the path of this cognitive banking journey.
Wonderful. Thank you, Shankar. That's a perfect note, I think, to wrap up on. We're just about the top of the hour, and we do always like to bring these things in on schedule and kind of respecting everyone's very, very busy days. So let me first by thanking Shankar for this wonderful presentation, great content, obviously something that really engaged the audience. We got wonderful questions. Thanks to the audience for being here and for asking those questions. Please keep an eye out in the next 24 to 48 hours or so. We'll be sending you an email with a link to this recording, and also an email with the links for these call to action call to actions on the screen that you see here. The C-suite study, the cognitive computing study, and also the part 2 webinar, Banking in the Cognitive Era. And again, that's going to be on December 9th at 2 p.m. I'll actually be moderating that one as well, and I'm really looking forward to it. So hopefully everyone here that can will join us for that as well. So with that, let me wrap things up. Wish everyone a wonderful rest of the day, and I hope you'll join us again here very soon. Thanks so much.